Ladies and gentlemen, welcome back to the High Performance Trader, the YouTube channel that collects data and builds profitable day trading systems based off that data. I'm Joshua Salvetti, and today we are going to do another data review on our strategy, the HPT crossover. It's a phenomenal strategy. It is simple, and guys, it's got to be simple, because if it's not simple, I'm not going to be able to repeat it, right? I'm not going to be able to repeat something extremely complicated, and it's got to be simple. Right, so we have a very simple three-step approach. And over the last 7 months, look at this, over 118 trades, 88 of them were profitable. We are currently standing at a strong 82% win ratio, and it's so cool to see. We've established a solid standard. So before I was a day trader, I was a data analyst, and I worked for a 5G telecommunications company. There's always got to be a standard. When you're measuring radio frequency, you got to base your measurement off a standard. Standards are a guideline, right? We need a guideline, and now that's exactly what we have for the high performance trader. See, this is what data does for me. It gives me insight. It gives me confidence. It gives me understanding so that I can scale up, so that I can execute appropriately. For every action, there's an equal and opposite reaction. This is life. This is physics. Why would the market be any different? Your stimulus must match your response. So if your response currently is unprofitable, right? Say you're an inconsistent, unprofitable trader, you have to check your stimulus. You have to check your input if you want to change your output. If you want to get in shape, right? Your output would be in good shape. Your input needs to be healthy diet, in the gym, positive effort, right? The market is the exact same way. We need a consistent approach, and this is what I have gift wrapped for you today in this lesson. So let's break it down. The first 2 weeks of March, and before we go any further, guys, if anybody wants access to these PDFs, click the link below in my bio. I will send you high-level summaries on a weekly basis. I was doing it monthly. Now I'm going to do it weekly because I truly believe it is important to give you guys the proper information on a proper time frame, right? So I'm going to be sending these out weekly for free directly to your inbox. So click the link below, punch your email in, get affiliated, and I will send these to you completely for free. They're extremely valuable, right? Like I told you, over the last 7.5 months, we're standing at an 82% win ratio. So let's break it down. We're just gonna, skim through this. Mostly, we're gonna touch on the 2 losing trades, but you're gonna see here the first two trading days of March were phenomenal. They were pretty much the same, and that's one of the best things about trading a repeatable approach. Is you are looking for the same criteria each and every single day. There's nothing new under the sun. It's not going to be unique, right? Once again, we're looking for that baseline, that standard. And when we see that standard, we act immediately. No hesitation, no reservation, right? It's like playing blackjack and getting a king, right? Pocket kings. You're going to bet on that. That's got a high probability of winning. It's not perfect. It's not going to beat a blackjack, but a king is going to give you very good odds of making money on that hand. So that's our goal over here every single day on the market. When we see our 3-step approach, we have to put money on that. It's not always going to work, right? Out of 118 trades, like 22 of them did not work, right? But once again, 88 of them did. So we need to stick to the data, right? We need to make data-driven, data-informed decisions each day on the market to build that correct, that positive, that effective input to get that good positive output. So this is what our approach looks like. Open prints established. I like that we're right here next to the 50. We get a very strong red bar ignoring the green bar in front of it. This is what I really want to touch on today. This is what's going to make you tons of money and keep you from losing money. There's a million day trading strategies out there, but how repeatable are they? For me, I need a specific set of criteria that's repeatable in all circumstances. I cannot have my criteria present itself and me go, let's see, right? No, I need to go, hey, when my criteria is present, there's an 82% chance of me making money. That's it. And that's what this strategy gives you. It gives you a way to not take losing, bad, forced, irrational setups, right? Because we all, listen, chances are, if you're watching this video, you're a day trader. And chances are, if you're a day trader, you've taken a lot of bad trades, right? A lot of trades that make no sense. A lot of forced entries, right? Based off emotion. This strategy alleviates that, right? It helps you not be so emotional. It helps you know, hey, until it's present, I'm not taking a trade, right? Like let me show you. Look at this day right here. This is one of our losers. This is something that really caught my eye in this week's data review. Notice here all morning until 11:30, there was no green bar that was ignored, right? So our entry criteria, just quick recap: open print, moving average cross, green bar, ignored, in short, going targeting downside, right? Just like the example, right? That first example is a perfect example, right? Open print, moving average cross, red bar, ignored, in the market long after the red bar being ignored. The RBI, GBI entry criteria is so important, right? So what I've found is if and when the market's not presenting it, there's really no reason for you to trade. Notice there's no RBI, there's no GBI here in the morning. The market's choppy. Until the RBI or GBI presents itself, there's no reason for me to make a move. I'm sitting on my hands. And what I'm starting to realize, and I'll let you know as soon as I have more data, is that if your edge doesn't present itself in the first 2 hours, there's no point to trade for the whole day. Yes, that's not saying we couldn't force a setup and make some money off this shitty price action, right? I'm not saying that. But really ask yourself, do you want to make money when the price action's shitty? Because every time you're extracting money out of the market, you're telling your mind, hey, what I just did worked. And this is so important. For the longest time, I had a horrible relationship with the market, right? And this is what I tell all the traders I coach. Your relationship with the market's flawed because you've compromised your values. You've taken trades that have had no criteria and you squeezed a little bit of money out of it. So now your mind's confused with what actually works. You've benefited from irrational, unlogical, and just erratic and complicated price action, right? Like you've benefited from that. You've gotten dopamine from forcing a stupid trade. So what happens is the next day, your brain calls on that information and goes, hey, maybe we can make something of this. And now you're actually swimming in waters with great sharks. You're trading in shitty price action, choppy, and you're trying to force things. Next thing you know, you lose some money. And then you try it again, you lose more money. See, this needs to change. For us to become the best versions of ourselves, to make that 100 grand, 200 grand, 3, 4, maybe even $1 million a year, we have to modify our approach to a T, to a point where we're only trading price action that serves us. We're only taking trades that are rational, that make sense. If we truly want to get rid of FOMO and become patient, well-rounded, disciplined traders, this is the path we need to take, right? So going forward, if my edge doesn't present itself in the next 2 hours or the first 2 hours, there's just no trade for me. So that was our first loser. Then you'd see our edge just presented itself flawlessly. Look at this day. This day we literally presented itself twice. Open print, moving average cross, red bar, ignored, in long, targeting previous day open print. We took this live. It was beautiful. Then price rejects off previous day open print, falls back below the 50 EMA, right? Healthy 5-minute trend. Price falls down below. We get a green bar, ignored, in the market short. This was our second trade. Stop above the green candle, targeting PDL and downside targets, right? That was beautiful. Absolute beautiful trade. This is another one. Price opens up. We get a nice push into the 50. Nice 50 EMA rejection. Price falls below open print. Look at the orange line. Orange line's open print. We fall below it. We rally up Close below the 9D EMA. Guys, this is so important. That 9D EMA is my guideline. Think about it. This candle was completely green for the first 4 minutes. Then that last minute, it sucks back down, selling off, closing below that 9, right? Respecting the EMA cloud. Guys, this is why our moving averages are so important, right? Moving averages, RBIs, critical levels. Those are the 3 main steps to this strategy. And that's all I'm looking at every single day, guys. Look, I mean, it's beautiful. Another one, open print, nice moving average cross. We're not just entering short here because where's my risk, right? If I just enter in short, FOMOing in, that's not repeatable. Guys, we need the repeatability. We need the same structured entry, exit, right? It's got to be the same because one day we're going to be trading 10, 20, 30, 40, 100 contracts. How are you going to confidently do that? You're just going to be shooting from the hip? Absolutely not. We have to trade in a structural fashion that makes sense, right? And this is just what's worked for me. This is what the data tells me. So I'm sitting on my hands. All this right here, I'm doing nothing. Doing absolutely nothing. I'm sitting on my hands. Price falls down below. We finally get the green bar, right? Because once again, I don't know if it's chop. I don't know if it's good price action. Until I get that green bar to be ignored here, it could be anything. And whatever it is, I don't want nothing to do with it. I need the 3. I need all 3. Open print, moving average cross, green bar, ignored, in short, stop above it. 91% we yielded on this trade. It's beautiful. And just one more here to touch on what I was just talking about. No green bar ignored to the downside. Notice what we don't get. We don't get the market imbalance. Nope, buyers just show up out of nowhere and price rallies up to open print. See, until we're getting our criteria, I do not want to trade. I'm not making a move. I'm not forcing myself in. I'm not forcing a setup to make a little bit of money because I don't want to program my mind to make stupid decisions. Repeatability is your ticket to living the life you want. There's no more time for this bullshit, right? Price rallies. We get the green bar ignored in short. Now look, beautiful move all the way down to previous day low. This was a losing trade right here. Our second losing trade in the first 2 weeks. Price rallies into previous day high. We reject. And let me show you something. Because even when you lose, you still win. Because you understand what's going to happen next. Check it out. Price sells off. Green bar, right? We rally into PDH. We sell off. We finally get the moving average cross. Okay. Looking for shorts. Targeting critical level 55368. Get a green bar, ignored. This candle's completely red, so we enter short. We're up about 17%, and then buyers respect open print and rally up. Notice right where we stop out, right? Price rallies up. Now we're getting a red bar that gets ignored off the 50, off the open, with a moving average cross. That would have lined you up for a beautiful long play to the upside. So guys, if you take anything from this data review, let it be this. I'm going to be sending out weekly data reviews, breaking this down, giving you more knowledge, more confidence, more competence, more evidence to believe in yourself and the strategy, right? Number 2 is respect the RBI and GBI. And if you don't get one, do not take a trade. It's not worth it. Do not program your mind to go full retard. Instead, stay patient, stay disciplined, take the day off. If you're not getting your strategy, if you're not getting your criteria, just don't trade, right? And number 3, even when you're wrong, you still have the opportunity to understand the story better and make better decisions. I love you guys. Thank you for joining us. Make sure you hit a like, subscribe, drop a comment below, get affiliated with HPT. Take the mini course, get involved, and I'll see you in the next lesson.